Hi, everybody. Good afternoon. As John mentioned, I am Apurv Suri. I'm part of SC Ventures, which is short for Standard Chartered Ventures. I joined about 5 years ago when we first started. And today for the next 15, 20 minutes, I'd like to discuss a few things. One, why we exist. Two, what is it that we do? And three, why partnerships continue to be very, very important to our business, to our bank, and to our industry. So as I mentioned, Standard Chartered Ventures started 5 years ago. We're a corporate venture capital arm of Standard Chartered Bank. We differ ourselves from other CVCs in a plethora of different ways, but really the premise of SC Ventures started with the idea that we need to create a platform within the bank for our businesses, our staff, our clients to come and innovate on. I'll be clear that we're not the only people doing innovation at Standard Chartered Bank, but we serve merely as a platform to bring forth innovation, bring forth partnerships, and bring forth things like investment. Our mission statement, as you can see on the screen, is rewiring the DNA in banking. It is not in Standard Chartered Bank, but it is in banking, generally speaking. And what I do for SC Ventures is I lead our client engagement and partnership stream. Really, my job is to find partners, work with them, and bring forward a plethora of different types of innovation I'll get into. Now, before I move on, I'll take a few minutes just to describe how SC Ventures is set up. We have three key main activities, three key main pillars, so to speak, and this is really how we differentiate ourselves from other CVCs. Typically, in most models, you won't see all three of these sort of pillars in one specific unit, nor would you see things like venture building to a large extent, which some banks have had difficulty doing. But before I get into other banks and how we differ ourselves and then more into the partnerships aspect, as I mentioned, I'll talk a little bit about how it's set up. So the first unit, or the first stream, is called Accelerator. I'm afraid I can't use the word pillars because that's not the right terminology, I guess. We all work together collectively, and that's why you'll see how these ventures and these initiatives sort of interact with each other. So the first one is the Accelerator, and the Accelerator is a physical hub. It's a physical lab that really interacts with the bank. We have an entrepreneurship program, and for the benefit for everybody here, we have about 85,000 staff at Standard Chartered Bank. About 40,000 of those staff have signed up for the entrepreneur program, which is no small feat. We have staff from anywhere from Asia, Africa, Middle East, some of the more remote markets, and having these staff come in, give their ideas, get funding, and bring these ideas to life is something very, very important. So that culture of innovation, that mindset of innovation, and the ability to a large extent to pivot your career from a banker to an entrepreneur is what this Accelerator provides. The other thing we then do in the Accelerator is we engage our fintech. As you can imagine, it's a very saturated space. If I want to do, let's say, payments, or if I want to look at an API company in the startup space, it is very, very difficult. The reason it's difficult is because every startup has nuanced differentiations, but they're almost always, in certain extents, solving for the same thing. We created this platform called the FinTech Bridge. The idea was for our business units to come in, to interact, to find startups on a shortlist basis that would otherwise take them a long time. That's our Accelerator track. Really, it's about innovation with the bank, about fintech engagement, and to a degree, a pipeline, a sourcing pipeline for our investment and our venture building. The second unit then is a venture capital fund. We invest in startups, but we only invest in our partners. What I mean by that is, before you even enter our investment pipeline, you must have done a successful proof of concept with the bank or be in production with the bank. This helps us stand behind the technology and really hits our sweet spot of the investment mandate, which is the series stage. Short story here, SC Ventures, before it started, by this individual called Alex Manson, who's the head of SC Ventures, was previously the global head of transaction banking at Standard Chartered. Before SC Ventures existed, we actually made our first investment. This was in 2016, and it was an investment into Ripple Labs, the blockchain settlement, and remittance. Needless to say, an investment in 2016 in Ripple Labs was very fruitful. We had a good amount of financial upside, but at the same time, we managed to get a board seat, which was even more important for us. That board seat gave us insights as to how the blockchain industry is evolving and the impact it will have on finance. And that's something we continue to see on a day-to-day basis. That really led the premise for SC Ventures. That really led the premise for creating not just an accelerator and a venture building arm, but also being able to invest. There was proof in the pudding. And then finally, the third sort of unit is, with bias, my favorite unit. It's ventures. We build startups. We actually build our own companies. We spin them off into separate legal entities. And a good example I can give is Trust Bank. Trust was, if some of you or most of you know, is a neobank based on partnerships. It's our second neobank that we've created. And what was interesting there is, a few years back, the Singaporean government was issuing digital banking licenses. We did not tap into that. And the reason we did not tap into that is because we have this wonderful venture, which my colleague will speak about later, called Nexus. It's been renamed to Audax. And that really enables you to leverage the Standard Chartered Bank license without having to actually procure a banking. The other thing that venture building does is that we actually work with companies to develop joint strategic partnerships. I'll get into that. So that's at a high level how we're set up. And just like any other CVCs, just like any other venture capitalist, we have a thesis, we have a mandate, but we have these four themes that we are driven by, and essentially a thematically driven organization. The first theme is online lifestyle and economy. As you can imagine, during COVID and even the precursor to COVID, the online lifestyle and the online economy was exponentially growing. COVID just sort of turbocharged that. For us as a bank, for us as an institution, it was very important to start participating in this space, start building ventures, start building companies, but also investing in this space. And you'll see in the next slide that this is the area that we have the most investments and the most ventures that we built. The second organization, or rather the second theme, is digital assets. So tokenization, metaverse, Web3. It could have a very profound impact, and it continues to have a very profound impact on our industry, anywhere from payments to looking at things like trade finance instruments and tokenizing financial instruments. We believe digital assets are here to stay. The last 6 to 8 months may not have been the best for this segment, but that gives us an edge over the competition. The edge is the fact that any company that we build, any venture that we spin out, goes through the same level of governance, risk, compliance, tech due diligence that a financial product would. So as an investor, as a client, the blockchain industry, you have a choice to go to a startup, or you have a choice to go to an organization that has been backed, funded, and rubber stamped by a regulated financial. That gives us trust. The third theme, which in my view is one of the biggest themes in today's age and date, is SMEs world trade. SMEs will continue to power the next stage of growth. Our biggest venture, our most mature venture, is one in India called Solve. It's a B2B marketplace, which I'll get into shortly. World trade and trade finance continue to be important for us as a bank. We're one of the largest trade finance banks in the world, and this is an area we continue to invest and digitize heavily. And finally, sustainability and inclusion. Can't get away from it. I don't want to say it's the flavor of the month, but it's something that's very dear to our heart, something that we continue to innovate around, and we're seeing a lot more traction and activity in the last 2 years than we have ever seen. So those are our themes. I'll just quickly give an overview of how we're set up with regards to some of the investments and the ventures under these themes. As I mentioned before, online economy and lifestyle is one that we're heavily invested into. I'll give you some examples of what some of these ventures are. So Trust I spoke about. Mox is another digital bank in Hong Kong. Actually, the first digital bank that we created in partnership with Hong Kong Telco and C-Trip. But there's some more interesting and fun ventures here. And this might be a bit of a shameless plug, so I apologize. There's this company called Cardspell that we've created. At a point of time last year, it was the highest rated lifestyle app in the Apple iOS store. What CardSpell does, which I use quite often, is that it optimizes your credit card reward. On average in Singapore, every individual has anywhere from 3 to 4 credit cards. So when I enter a Din Tai Fung in Orchard Road or a Starbucks in Marina Bay, I don't know which credit card to use. I don't know which credit card will give me the highest rewards, which one has the best benefits, without me actually getting into the details. So what CardSpell does, for example, is that I'm able to tell CardSpell what cards I have, what credit cards I have. It already has a full list of benefits of these cards and how they change. And every time I enter a store, whether it's, again, Din Tai Fung or I'm doing some shopping here and there, using geofencing, CardSpell will give you a push notification and say, hey, I see that you're in Starbucks in Marina Bay Financial Center, use this credit card. So that's an example of how we're creating different types of ventures that have a bit of finance linkages, but are fun at the same time and solve a real world problem. The second one is digital assets, which again, I mentioned before, but Zodia is essentially the first digital asset company that we created. It's in partnership with Northern Trust, and it's a custody solution. So if you're a large institution, if you're Microsoft and IBM or a BlackRock or any of these guys, you may be investing in digital assets. Now, custodizing those digital assets has an interesting dilemma. You either do a hard custody, which requires a fair amount of governance and understanding and security within your own organization. The other option you have is to go to a startup or one of these exchanges, which may or may not keep your assets safe. The third one, which is the bet that we took, is to put your custody in a bank-backed, bank-graded solution. So really, that's for institutions to come in, custodize their tokens, whether it's Bitcoin, whether it's Ethereum, or anything else, and we guarantee the safety to a certain extent based on the due diligence that we've done. We created a new institution there called Zodia Exchange, and again, that's a marketplace exchange for SMEs and world trade. Just to give you an example of partnerships, given that's the theme of this track, PassConnect was one that we built with Lenovo. It was an interesting journey, and actually one of the first co-creation partnership ventures that I was exposed to about 2 years ago. Lenovo came to us, and it came to many other banks. We were actually, to be fully honest, we were not even a tier 1 or tier 2 bank for Lenovo. We were a tier 3 bank. That means we weren't giving a lot of lending, we were not giving a lot of balance sheet support, but there was some form of financial services that we were providing. Lenovo had this mindset that, hey, I run the 15th largest supply chain in the world. I, as a treasurer or as a chief financial officer of Lenovo, don't have the ability to get an end-to-end view of my trade finance and my supply chain finance. And the reason being, and we commissioned a research around this, that as an organization, as a large multinational, you need anywhere from 9 to 10 integrations to get an end-to-end view across different banks, across different capabilities. And Lenovo had this mindset that they said, we just want to pay somebody some money, and I want them to build me a platform, and I'm going to walk away very happy. By the time they got to us, it was late in the game. They'd gone to all the other banks, all the other big guys. Some had provided turnkey solutions. Some had said, sure, we'll build this for you, and we'll take it away, and we'll have a good relationship. Fortunately, we were the only organization and the only business unit that said, hang on, if this can work for such a large supply chain, if this can give you a competitive advantage over your competitors, then we believe that this could be monetized and sold to a lot more anchors and organizations. So why don't we not take all your money? Why don't we take half of your money? We'll put in the other half, and we'll build something together. And that's the only thing that brought Lenovo back. Because in Lenovo's mindset at that time, and before speaking to us or before us pitching to them, it was a cost, it was a CapEx, and maybe OpEx after that. We were the only ones that said, well, yeah, you're going to have some capital expenditure, but after that, not only are we going to be solving your current pain points, but we're going to give you a new revenue as a shareholder. We're going to give you the ability to monetize the problem statement that you had. We're going to give you the ability to work with us and the entire ecosystem to sell these services. I'm delighted to say PassConnect became live last year, middle of last year, and in about 7 months, it did about $14 billion of invoice discounting, which is a massive flow for a startup of that size. I need to talk about APIs. I think this is where I will be talking about APIs. For Task Connect, we really are marketing it as the trade finance operating system. As an organization, you don't have to worry about integrating with a DBS, Sumitomo, a Standard Chartered bank. You only need to worry about integrating with Task Connect. Once you've integrated with Task Connect is connected already to all these organizations, to all these banking partners, to all these capabilities, so that you as a treasurer get one platform, one view, one channel to manage your finances and your treasury. And that's where APIs became exceptional. And finally, we have sustainability and inclusion. Sustainability and inclusion, as I said, very important, very dear to us. It's something, whether you look at the finance side of our organization, that we continue to do, while it's something that we continue to innovate around. My point being that whether you look at these ventures, whether you look at our investments, these are all based on partnerships in some way, shape, or form. For me, as a bank, as being ex-banker and now in this sort of corporate venture capital unit, what was very important was to make sure that the bank and the industry starts tapping into adjacent areas that traditionally on a standalone basis we were not able to. What I mean by that is when I'm looking at the gaming industry, for example, it's been very hard for banks to penetrate this. We just haven't been able to because we don't know how to assess the credit, we don't know how to assess the market, but we know it's an exponentially growing market. We know it's a ballooning market, and we know that there's a force for good we can bring to the space. So I'm currently working with a gaming partner to create a proposition that will provide lending to the gaming ecosystem, which again, on a standalone and a traditional basis, we would have not been able. Same goes for quantum computing, same goes for metaverse, same goes for Web3. This is how we're changing the strategy of the bank. This is how we're taking the bank along. This is how we're bringing the industry into areas that we haven't been. I'll pause here for any questions. I think I'm almost out of time. If not, I'm around if you guys have any other thoughts. Cool.
Okay, I have a question.
You do?
Yes. And perhaps after I finish my question, then maybe one or two others. But you hinted at some of the things that you invest in, and I got a sense for some of the aspects, that some of the criteria you look for investment. So you mentioned somebody should be partnering with you before you would invest in them. But for a typical venture fund, when they look at investments, they start to think about a certain filter, like what are they good at and what are they trying to achieve. So just what are the sort of key criteria that you apply when you look at investments, whether it's in your entrepreneurship program or whether it's investments in partners?
Sure, happy to. So maybe I'll take the investment part first. For us, financial upside is secondary. I would say that. I mean, it's very important, as you can imagine. But what's the most important when these investment discussions are happening is two things. One, does the technology work? Can we stand behind it and therefore sell it to our clients, scale it in our footprint? That's where the POCs or the production of the bank come in. And two, what value can we bring to the table? We're not financial investors like any other VC. We're strategic partners. And if we cannot clearly answer these two sort of points, these two KPIs, so to speak, likely the investment committee will say, you know what, let it be. Same goes for entrepreneurship. Entrepreneurship for us could either mean small and incremental changes in our banking businesses and the way we do business, or at times it could mean an entire new business in itself. We ask ourselves the same questions there, albeit a little bit more. What is it that this venture brings to the table that gives us the right to win, i.e. what's our edge, what are we bringing to the table, and therefore why should we be following this proposition? And the same goes when any other VC looks at startups or ideas, who's the team behind it? Team is paramount for us, especially in early stage investing, which is where we are in the entrepreneurship and the venture.